Hey, welcome to the Market of the Moment update for the week of January 9th, 2023. Michael Oldham here with the Oldham team, Chris Madrid with Caprock Home Loans. Good to see you again, Chris.
Glad to be back. Glad to be back.
Been a couple days since we've seen each other. It'll be a couple more days to see each other again. So you ready to jump into this today?
Yeah, a little lackluster with the market today, but yeah, let's get after it.
All right, well, let's get going. Chris is with Caprock Home Loans out of Prosper. He can do any of your home loan needs. Today, we're going to touch on rents continuing to rise, current mortgage rates, and then we'll go over our MBS Charts. So take it away, Chris.
Yeah, so kind of big day for inflation numbers. CPI report came out today, and it was a negative 0.1, so a tenth of percent there is what it was down, which was essentially expected, right? So that was as the market expected. So typically what ends up happening, right? If news comes out that's predictable, then the market may have already built that in. So there's just there's not a whole lot of activity or stuff that may happen. In this instance, there was the expectation, right? So what could have come out, and then what could have come out. So there was we were expecting a couple of other things to come out that would have brought inflation lower, but we did go from 7.1% last month down to 6.5% today. So inflation is coming down, right? And I caught a little snippet from Freddie Mac earlier this week that says inflationary pressures are easing and should lead to lower mortgage rates in 2023, like we have been talking about, right? Since they peaked back in November. Yep. But obviously that will then help with affordability, with obviously millennial renters being able to get out there and purchase homes. So as of this week, we're seeing rates obviously tick down a little bit today. We're at 6.1 to about 6.4 is kind of the trend now. There are options, of course, like we talk about. You can get lower if you want to pay more points. There's all kinds of creative financing options out there still to take advantage of maybe a 2-1 buy down. There's things to get your interest rate lower temporarily in front of what we feel will happen later on down the road, maybe in the next 6 months, 8 months, to then permanently lower your interest rate, right? But for the most part, 30-year fixed, 6.1 to about 6.4 on a conventional loan. FHA and VA, crazy enough, are now below 6%, which is great. So those are traditionally they're always a little bit lower than conventional, but yeah, 5.7 to about 5.9 on FHA and VA, which is great. So overall, again, it's not going to be in a straight line, but we fully expect interest rates to continue to kind of creep down. There's again more in February there's going to be a CPI report coming out. March, April, we don't expect a big jump downward until the May. I think it's May 10th is the next CPI that's coming out. That will be meaningful, right? That we should get another good drop then. One of the things that I wanted to kind of talk about as well is I would put out these little did you know points. And did you know from 1971 to 2022, the average rate for a 30-year fixed mortgage was just under 8%, right? So today rates are significantly below that in terms of average, right? But that's just one of those things that that nobody talks about, and we only remember that rates got down to rates were 2%, right, or 2.5% a year ago. Yeah, 3%, whatever, depending on the timeline that you're looking at. But the reality is, like, if we're looking over the last 50 years, 8% still is about the average. So that's one of the things to just keep in mind. And if you want to jump over to the next slide, thankfully enough today, this is kind of the main culprit of the market not doing what we were hoping that it was going to do, right? December shelter has been the highest print since 1985. we saw a little bit of a dip from November, right? So from the kind of October to November numbers, it dipped down. And then from November to December, which this still doesn't, like, I'm still trying to wrap my head around how we think that rents and even from a housing perspective jumped up to the highest level since 1985 between November and December. So anyway, we can't speak hypothetical here, but that's what's printed. I don't think it's right, but whatever, right? Housing prices were down 0.5% month over month. Rental prices down 0.8% month over month. But somehow our shelter number is showing up about 0.8% month over month, which took it to the highest level. So this is one of the things that that didn't help in giving us another little bump today in mortgage-backed security. So we can jump to that the next chart there. Yeah. So thankfully enough, we are still moving in the right direction as of right now. Mortgage-backed securities, we're at about 101.61, and there is some, obviously some ups and downs even throughout the day. We're going to have a 30-year bond auction later on today. That could help. So we could see a little rally later in the afternoon, but we're still seeing a good little uptick. If we're looking back from October, when rates were, kind of peaking, we saw them peak early November, and then just a good little, with that, we just keep looking back at that November 10th candlestick there. That just really helped, get rates kind of at the levels that we are now. And again, we're expecting one later on this year. That'll keep helping. If we look at, this is kind of a 3-month look back. If we look next to the 6-month look back, we're still hovering, but right below 102. But there's obviously a lot of room to the upside there, and I don't feel like we're gonna overall get much higher than what we saw back in back in August. So we may get up into the 10, what is that, like 102.8, 103 section, which would put rates probably around around the 5% range. So again, much like we've been expecting, right? Things are improving. From a market perspective, from a mortgage rate perspective, it's a little bit it's a little bit cheaper right now, right? If you're financing at 7.5% versus low to mid sixes, I mean that 1% is going to make $200-300 a month difference from a mortgage payment perspective. So still a really good time to buy, as we're going to probably jump over into your section to to look at what the
I just had a buyer reach out earlier today. I gave them your information because they were kind of looking to maybe get started next January. That's when their lease is up, and I was encouraging them if they could get in the market now, that would be the time. So